I think that once the genie of inflation is out of the bottle in the real economy, it's very difficult to put back under control. Right? You really think the Fed is going to raise interest rates from here? When in Q4 of 2018, they tried to raise interest rates, to 2.5%, and they were basically taken out in the street and shot, right? The Fed says, oh, we have all these tools to control inflation. Give me a break.
From the NXT studios in Southern California, this is the Power and Market Report. I'm your host, Albert Liu. My guest today is Ben Hunt. He's the co-founder of Second Foundation Partners, the publisher of Epsilon Theory, an online source for financial market commentary. Ben, this is your first time on the Power and Market Report. Thanks very much for joining me today. How are you?
It's great to be here. Thanks for having me.
Ben, we met sort of briefly a little over a year ago at the New Orleans conference when I was moderating a panel that you participated in with Peter Schiff and Mike Larson, and I thought your ideas were very interesting. Unfortunately, we were sharing the time, of course, with other people. I didn't get a chance to delve deeper, so I was hoping to take this opportunity to delve deeper into your thoughts and maybe how they've changed maybe in the last year and a half for my own edification. But I want to say as we start that I wasn't familiar with your work prior to New Orleans, so in preparation for that panel, I did do a little homework. Came across your interview with Grant Williams on Real Vision. Yeah. I'm a big fan of Grant, what he and Raul are doing over there, and I thought it was just a splendid interview. Really, really nice. So maybe share with the viewers first what you do, but then also your background as what you called, I think, a dilettante farmer. Get into that a little bit.
That's me. That's me, Albert. I've done a lot of different things in my life. My wife says I can't keep a job, so but what's been I'll say the strand that goes through all of them is trying to be. I'm a puzzle solver. I like to figure out puzzles, and I started as an academic. I got my PhD in political science, of all oxymorons, and because I'm trying to figure out the puzzle of, how do countries interact with each other, right? Or how do voters, as in sort of the behavior of crowds, how does that work? And for 10 years, I was in academia. I was a professor, and the issues I wrote on, the research I did, was trying to figure out, well, how are, again, crowds, in this case voting crowds, how are they impacted by the words we hear, the stories we are told, right? The narratives, as I like to describe them. The problem, of course, with academia is that the puzzles you're trying to solve, you're locked in your little garret, or you're publishing maybe to a very small audience, and so I always was interested in a much larger puzzle, which is the puzzle of markets, the game of markets. So I had the opportunity to leave academia first with starting a software company. We did well with that, sold that. Then I got into the investment world, first from venture capital, some private equity, but finally into public markets. And like I say, the biggest game of them all, and trying to understand that puzzle. Ran a hedge fund for 7 or 8 years. We got that up to about $1 billion, and never lost money for clients. I'm still very proud of that. Had a tremendous year in 2008, right? But from March of 2009 onwards, it was like you went to the switch on the wall and you flipped off the lights. Our returns really flatlined. They say we never lost money, but the investment world really changed. I can point to the date, in March of 2009, when I'll say not just the Federal Reserve, but central banks all over the world took this very interventionist policy, I think probably smartly, rightly, in March of 2009. But what you see, both in our recent past, but also in every time when you have these emergency government actions, they always become permanent government policy. And that's certainly what we've endured over the last decade in markets. It's what we endured in my hedge fund, where the fundamentals didn't seem to matter anymore. And they, I say didn't seem to matter, they really didn't matter anymore. So, you know, we gave all the money back to our clients, and I decided I'd really take some time off to try to figure this out. You know, what does matter today in either managing other people's money or investing our own money? And that's when I started writing epsilon theory. I'll get back to it and we can tell what that means, epsilon theory. But the whole idea of epsilon theory is that it's not alpha and beta. It's not looking at the fundamentals of this or in terms of beta, the overall market of that. What is really driving both our political but also our investment gains today, I think, is that first research puzzle of mine, the use of narratives, the way that we as a crowd of, in this case, investors, respond in systematic ways to what we are told, whether it's called forward guidance from central banks, whether it's Trump tweets, whether it's Kramer on CNBC. You know, we're immersed in this ocean of messages and stories and narratives to a degree that, you know, I don't think has ever existed. And so that's the puzzle I'm trying to figure out. That's the puzzle that I write about, is to focus not on the fundamentals, but actually on the narratives, because I really believe more and more that's the answer for figuring out the game of markets. That's what I do. That's what I do, Albert.
I think, and tell me whether or not you agree with this, Ben, but the reason that narratives have become so important, and I do agree with you on that point, is because the Federal Reserve and the federal government, together controlling fiscal and monetary policy, wield so much power, and they are accountable in some sense to public opinion, and public opinion is swayed by narrative. So you don't have independent investors. You have one big investor in the Federal Reserve that can buy trillions and trillions of securities. And then you have a taxing authority that can tax and spend on things. And they just make too big of a splash. And so you have to respect that. Do you agree with that?
Well, I do, Albert, but I would go even farther, frankly, because it's not just what I'll call is the mechanistic impact of, in the case of central banks, buying securities, you know, and adding to their balance sheet by buying financial assets. Yes, that has an impact, right? It is the tide that lifts all boats. It is the avowed purpose of large-scale asset purchases. But what I think is even more important today than I'll call it, again, the mechanistic impact of the actual purchasing of securities is what I'll call, what we would call in game theory, you know, the common knowledge game, the role of words, of forward guidance, of what they call in the Federal Reserve communication policy. And I say this not in some tinfoil hat conspiracy notion, but, you know, this is, I often talk about how Ben Bernanke, his last speech as Fed chair, you know, it's interesting what people say in their last speech, right? So, you know, George Washington talks about, you know, the dangers of entangling alliances, you know, in his farewell speech. You know, Dwight Eisenhower talked about beware the military-industrial complex. I mean, Dwight Eisenhower, for God's sake, is warning about a military-industrial complex. Well, Ben Bernanke kind of had a similar moment in his very last speech as Fed chair. And it's a wonderful talk. He says, well, you know, been here for 8 years. First 4 years, all right, seemed to be steady as she goes, right? These last 4 years, because the last 4-year term started in 2008, it's been quite a doozy, right? And he said, well, the first thing we did in response to the great financial crisis is we used the toolkit that central bankers have always had, right? We took interest rates, short-term interest rates down to zero. Right? We didn't know at the time we could have negative interest rates, you know, we just took it down to zero. And that, that's what we thought we could do. And it wasn't working for us. So we came up with a second set of tools, the quantitative easing, or the large scale asset purchases. And Bernanke says, look, I think QE1 was really successful. Again, speaking myself, Ben Hunt, I agree. I think Q1 actually saved the world. I think that's what central banks are supposed to do, right? They are supposed to provide that emergency liquidity, that emergency shot of adrenaline when the heart of the global market economy stops beating. But like I say, the problem is that emergency government action always becomes permanent government policy. And that's certainly what's happened today. We now have a permanent IV drip of adrenaline in the form of these large-scale asset purchases. And the crazy thing is, Bernanke agrees with this in this last speech. Right? He says, frankly, QE2 I thought was kind of a wash. I had some puts and takes. I don't think it really did anything. And he goes on to say, QE3, what we did after that, the twist and QE infinity, whatever you want to call it, Ben Bernanke, the outgoing chair of the Federal Reserve, says, I think these were counterproductive. Now imagine that, right? Yeah, he says, I don't think it had a real world impact. Certainly had the impact of inflating, financial asset prices, but it wasn't accomplishing what we thought we could in the real economy. But then he goes on to say that, well, in his words, fortunately, right? My view, not so fortunately, he says they had a third toolkit. And this third toolkit was what they call, the Federal Reserve calls communication policy. It's expressed in this notion of forward guidance. And it is, as Bernanke says, the intentional use of our words to try to change investor behavior. To use our words not because we really believe the words, but because we think the words will have an impact or an affect in changing investor behavior. What we might call lying in other circumstances. And he says, look, this is why we have a calendar where we send out, every governor of the Fed goes out with this calendar of the interviews they're going to give and the talks they're going to make. It's all coordinated. It's all coordinated. This didn't exist before, but it is absolutely an intentional and very effective way at changing investor behavior. I'll tell you, it's something that politicians have known forever, but now everyone is in on the act. Everyone now uses their words and carefully constructs their messages because they want to have an impact with their words alone. Right? So this is what you see from CEOs, whether it's Mark Benioff or Mark Zuckerberg, right? This is what you see from central bankers, right? Whether it's our own Fed leaders, whether it's, Mario Draghi or, whoever is running a central bank, everyone knows now this is how it works, that you can use your words, and there's a pattern for how the words are used, and that's what we're trying to measure in the research company that I set up. How are these words used? How do they have an impact on us? Because we're hardwired to respond to this stuff. And that's what I think has an impact even more than what you correctly point out, I think, is I'll call it the mechanistic impact of buying stuff.
That's very interesting. I actually agree with you in the sense that they've just invented this new tool. It's related to the tools that existed before. They're just translated through time. And the forward and the expectations actually become the policy. And then the follow through or lack of follow through on that becomes a backward revision. So I agree with that. And the markets are behaving the way they would if you did that with your children. If you promised a trip to Disneyland and then later you said you weren't going to do it, they would throw a tantrum.
Children and markets are very effective and they're very effective at learning how to turn your words against you. Yeah. That's exactly right.
Yeah, I actually don't. I actually don't come down hard on my kids when they try to do that to me, because that's the preparation for the real world,
Exactly.
is
Put
to
it right.
manipulate situations like that. So that's very interesting. And the way you write, because I have sort of dipped my foot in epsilon theory, I can see why it's so popular. Because it's very well written, it's very clever, and if you read carefully, it's a tad bit rebellious, which we love. And you talk a lot about, at least on the interview with Grant Williams, you talked a lot about your farm and the
Well,
animals. I really enjoyed that.
thank you.
And I have a friend who is in a similar situation as you, has a career in engineering, but has a farm, which is doesn't produce a lot, but it's a legitimate, authentic working farm. And so he also has these analogies, and I want to ask you if the links that you see between the farm, ecosystems, animals, biology, and markets, are you just seeing them because that's what you're immersed in? I mean, you know what I'm talking about,
I
where
do. I do.
human beings were programmed to recognize faces. We're just sort of evolved and hardwired to recognize faces. So we see faces in clouds and food and the dirt and the beach and the ocean. Have you become soft wired to see analogies and connections to farms in markets?
Well, it's the word you used just a second ago, Albert. You used that word authentic. Right? And what I love about my dilettante farm, and look, our animals are pets, right? I mean, I like animals that pay the rent, like the bees. I like the chickens, but our sheep, we shear them and we use the wool, but they're basically pets, right? And so this is not a working farm. This is for me personally trying to get back to a world of, your word, authenticity, right? Because there is a realness to the real world that is so distant, and I think is such a healthy corrective to the world of artifice that we live in today, playing the game of markets. And I think that distance, that gulf between the world of artifice, the world of words and stories and narratives, and the real world of fundamentals, right? I think that gulf has grown so dramatically over the last decade, again, intentionally so, in every aspect of markets. And so for me, the not just the respite, but reconnecting with a world of cycles, the seasons, a world of earth, a world of real life where yes, you must eat, right? You must drink fresh water for the animals. You can't tell them a story, right? They'll die. It is that authenticity of even my dilettante playing at being a farmer that I find is just enormously intrinsically rewarding. So you ask about the stories I tell. Well, look, my effort is to try to communicate to a broader audience these stories of the real, to bring into sharp contrast the stories of artifice, this world of artifice that I think we live in more and more in our market existence, our existence as investors. So yes, I intentionally look for and identify patterns in nature that I can then write at to draw contrast with our world and markets. I do that intentionally because I do find that these stories of the real, of the farm and of animals, are so powerful and evocative to people like you and me who otherwise spend all their time in markets. I think we all know that something is wrong, right? That I'll use this phrase or this great line from one of these spaghetti westerns of Clint Eastwood, The Outlaw Josie Wales, where, in pardon my language here, where a character says, don't piss down my back and tell me it's raining, right? I feel like we live in that world, that world of people telling us stories in our market existence. And that's why I find it so powerful to bring forward stories of the real, of animal behavior, of farm behavior. And it immediately throws our market world into such sharp contrast. It immediately gives a point of purchase for someone to read the article and say, you know what? This market world, it's not real. It is what I like to call fiat world, where opinions are presented as fact, right? Where we are told the way the world works, in sharp contrast to what we see with our own eyes. So yes, Albert, it's all that. I do intentionally look for these connections precisely because I find them so powerful in bringing into sharp relief this world of artifice that we're immersed in markets.
Ben, I want to try out an analogy on my own on you, and then we'll move on to some maybe practical discussions on the markets. When you're going through your farm, you talk about how each of the animals, they sort of pull their weight in a sense. They produce. My friend who has the farm is very proud of that fact as well. Everyone has a role, and if you don't have a role, then you better watch out because an axe may be coming. And so you talk about the chickens, the sheep, and so on and so forth. They all pay their way. They produce eggs, wool. What? In a sense, they're producing earnings and dividends. And when you talk about the suspension of reality, that happens in the public markets, but it really happens in the private markets. When you talk about WeWork and Theranos and companies like that, these, to use the phrasing that you used on the farm, these are pet stocks.
Yes.
They're not working stocks, they're pets. And, your daughters may have had some role in being able to classify so many of those animals as pets. Why are we tolerant of that in investment markets? Why are we willing to put up with so many pet stocks?
It's always the byproduct, Albert, of the hothouse environment that one lives in at the end of a 9-year bull run, right? You are looking for stories, for entertainment, because your survival's not at stake, right? I mean,
yes.
we've got a couple of goats on the farm. Our goats do nothing, right? They're a pleasure. They're a joy. Goats are fun. They're dancing around. I like to think of them as like, mobile art. They're a luxury. Right? And so I love my goats. I can't imagine not having the goats, but they're an absolute luxury. And this is what always happens in markets at the end of a long bull market, is that we find our pleasure, we find our art in these crazy cockamamie stories like a WeWorks, right? And it is how humans are wired. And then again, it gets back to this what I try to write about, and what's really driven me in all my kind of figuring out games and puzzles, whether it was in academia or the software puzzle or now the markets puzzle. It's how we, as a human animal, right? Forget about the farm animals. Let's talk about the human animal. How the human animal is hardwired and, as you say, soft-wired to respond to stories, right? Whether it's the story of the gambling goat or whether it's the story of WeWorks. And these are the stories that I think if we continue to bring them to our own attention, we're not immune to any of this stuff. None of us are. But at least we can be more resistant to them by remembering these stories and remembering that, what we think is only natural is frankly a creation by somebody who understands how we are wired as a human animal.
Ben, I don't know if it was the panel that we did together in 2018, but I distinctly remember asking for predictions as to when the bull market would end and possibly end in a recession or a depression. And before I received the responses, I joked that everyone always says it's 2 or 3 years away. And sure enough, the answers were all 2 or 3 years away. And I had the same folks on the same panel this year. And I was thinking, well, I mean, it's got to be 1 or 2 now, right? I mean, it's a year later. It's the same guys. And I thought and I count myself in that group as well. I've been, concerned about this for a long time. And I thought the hallmark would be something like WeWork, getting shut out of the public markets and those valuations coming down. The closer you get to the end, the more ridiculous the story is that we're being asked to buy into. And that was truly a ridiculous story, and it was shot down. And so what do you think? Do you agree with me? I mean, is this sort of the first sign that at least this chapter of the story is over?
So George Soros, who, whatever you think of George Soros, he's a great investor, right? And he has this wonderful line, and it was somebody was asking him about, I don't think this was about when he and Druckenmiller were, making one of their fortunes on the, shorting the pound. I think it was another currency. But, somebody asked him, to talk about what he was doing. And so he started explaining, what was going on and how he's positioned. And somebody, the reporter said, well, why are you predicting that? Why do you think that's going to happen? And, I duplicate the accent if I could, but I can't do my, old Hungarian accent very well. And Soros said, young man, I'm not predicting, I'm observing. I'm not predicting, I'm observing. And that's really stuck with me a lot. Right? And the way it's stuck with me is that I think that when you think of things in terms of a game, and here I'm using game theory in that rigorous sense, it does not lend itself to a prediction, right? And that's why I always hate these kind of exercises that we feel like we're forced to go through to predict something. What I can do, though, because I am focused on observing changes and directions in the narrative, I'm not even going to try to pretend to predict when does this break, right? But what I can, I think, tell you is what we have to observe before it can break, before the story breaks. Right? One of those things and what I mean by the story breaking is basically an emperor's new clothes moment, which you're right, we kind of did with WeWorks, right? Right? It was like, oh, wait, community adjusted EBITDA. What? Wait, what? You paid the guy to $90 million to get the name We? What? Wait, what? It was an emperor's new clothes moment. And that is absolutely a hallmark of the story breaking. But listen, the WeWork story broke, but that was a company looking to go public. You didn't have public investors in WeWork who suffered the brunt. The brunt was, shouldered mostly by Masayoshi Son and SoftBank, and I'm not going to cry for them, and they're not I think suffering from this, right? The lessons of that I don't think are really realized in the form of SoftBank. They're going to keep on doing this forever. What we have to see is those sort of emperor's new clothes moments, not on a single company that's looking to go public, like WeWork. We have to see that same sort of breaking of a story around one of our big institutions, like the Fed, like the ECB, like we saw in 2008 when the story broke about Wall Street and Wall Street banks. By the story breaking, I don't mean about being revealed. I mean about the confidence, the narrative that these guys were large and in charge. That story broke. It fell to pieces. We've got to see the same thing happen. This kind of emperor's new clothes moment where the little girl in the crowd says, hey, wait, WeWork, that doesn't make any sense. But instead it has to be that statement, hey, wait, Jerome, that doesn't make any sense what you're talking about what the Fed is doing. That's when it changes. Right? I can't predict when that's going to change, but that's what, when you observe that is when it will change.
I mean, that would be a serious development, though, right, Ben? You started this discussion by saying that you supported the Fed's intervention with QE1. Uh, if the story were to change and it were to be revealed that the Fed had no close, that can't be something. I mean, they're no longer sufficient lender of last resort. That can't be something that you would want to see, is it?
Look, I very much believe that what the Fed did in March of 2009 was exactly what you want a central bank to do, because we really were on the verge of the entire system breaking down. What I think has developed in the decades since then is not a risk of the system breaking down again. Instead, I think it's the risk of the system overtaking, use the Star Trek as becoming the Borg and enveloping everything, so that there is no more market, so that capital markets, this is the phrase I like to use, capital markets have been transformed into a political utility. That's as much of a tragedy, right, as the markets collapsing. I'd like to think that there is something in between those two extremes, right? I'd like to think that we can have a functioning break glass in case of emergency central bank, that when that emergency occurs, as it did at the tail when Lehman was taken out in the street and shot, right? When the entire global financial system is on the verge of being ruined, you break that glass in case of emergency and you take those emergency actions. But I don't think that our choice has to be defined in either, well, you've either got that or you've got this Borg-like central bank and Wall Street edifice that eliminates price discovery, eliminates the role of fundamentals, and again, transforms markets into this political utility. I think we can find something in the middle, right? And that's what I'm hoping for. And what I'm suggesting is that you'll know that that is happening when you have that emperor's new clothes moments with what central banks are doing today. And if you want to know, I think I know what that story might be.
I could argue that the banks were turned into utilities the minute Paulson said to Bank of America, you got to buy these guys, and Bernanke said to these other guys, you can't pay dividends unless we stress test you. I mean, that essentially took the market forces out of banking. And if we were to go back, you would have to concede that some of them would fail and other ones would prosper and pay dividends and have rising stock prices, correct?
I'm with you 1,000%, right? This has been, what I'm saying though is this has been a process, right? It's a process that, look, I get it. If the choice is between, all right, Wall Street doesn't exist anymore and we're going to have this intervention, okay, I can get that trade-off. What I can't get, again, is transforming emergency action into permanent government policy. And that's what we've had, right? So I'm hopeful enough to think that we can at least not exist at either extreme, because I do think that we have absolutely evolved into this extreme where, again, Borg-like, there is no more price discovery, there is no more role for fundamentals. It's all story. It's all story. And I think that can be diminished, undermined, I hope, I think, I want to believe, right, without going back to a collapse of asset prices and the end of the system as we know it. But I think the longer we go on like this, the longer we go on without an emperor's new clothes moment, then the more painful the fall from these heights will be. But look, it's going to, none of this is going to happen organically or on its own, right? We saw that in December of 18 or Q4 of 18, right? Where oh my God, we're raising interest rates to, you know, checks notes 2.5%. Oh my God, the world can't handle that, right? And so we saw, you know, Powell and the rest of the Fed totally turn on a dime and cave in to what are political pressures. And, you know, we saw what happened this past year in 2019. So it's not going to come from inside. Right? It's going to have to come from the outside, and the way it's going to happen is in a breaking of the story. And I think what breaks that story, I really do, I think it's inflation, because I think it's coming. I think it's coming because of another thing you mentioned, Albert, which is not just what central banks are doing in terms of their asset prices, what's happening in terms of the government, in terms of its control over fiscal policy. I think that inflation is coming into the real economy, not just in the financial world, as we've seen with central banks buying assets. And I think inflation is coming. Frankly, I think it's already here. And I think that's what breaks the story of central bank control.
Ben, I want to shift the discussion now to an article you wrote about Facebook and Bitcoin.
Yeah.
You titled it "The Spanish Prisoner." I thought that was very interesting, and I actually, again, am on the same page with you on that. And I'll take it one step further. But basically, you're saying that Libra was designed to co-opt Bitcoin. Libra is the cryptocurrency currently being promoted by Facebook. Can you just go over the thinking behind that?
Sure, absolutely. I'm a fan of the, I'll call it the positive energy that comes from Bitcoin true believers and the crypto community more generally. I share so much of the sentiment, right? So much of the animus that directs that community, which is to say, look, our current monetary policy is being used against us, not for us. So I understand the interest in finding and developing this alternative to fiat currencies in the form of Bitcoin or crypto or the like. Right? I think there are real issues with that because I don't think the government, any government, will ever willingly give up its ability to control money. Right? I think that's why governments exist, is to control money and the taxes that come from that, the seigniorage that comes from the printing of money and the control of taxation. So it's the political risk around cryptocurrencies and Bitcoin that leads me not to be a big participant. Right? But I get it, and I share again the energy and the sentiment that underlies so much of crypto and Bitcoin. What I think Bitcoin, the real power of it, and much of crypto, is that it is, if not censorship proof, it is censorship resistant. Right? That's a phrase you hear a lot of times when you talk about Bitcoin or cryptocurrencies. And what that means is that because it has this underlying distributed ledger technology, Bitcoin being one of those powerful and elegant distributed ledger technologies, the record, the history of that Bitcoin or that coin, right, that crypto coin that is censorship resistant, you can't easily, at least, right? A government can't come in and you know, control it, right? It's censorship resistant, if not censorship proof. What I thought we would see, and I think Libra is just the first of these attempts to co-opt censorship resistant coins like Bitcoin. I think Libra is intentionally set up to be a censorship embracing coin. Right? The idea behind Libra is not that, oh, it is somehow in opposition to a government or separate from a governmental sphere of control and censorship. No. Libra embraces the idea that it is compliant with the government. So, look, maybe it won't be Libra. Facebook's got its own public relations issues for sure. But beyond Libra, there will be others, other coins, other cryptocurrencies that are promoted specifically by corporations, not in a resistant way to government, but in a collaboration, cooperative way. And that's what I mean about the how, in my view, Libra and these sort of censorship embracing coins are trying to co-opt the idea of Bitcoin and crypto, but do it in a way that's non-threatening to government, and hence, from my point of view, loses all of its appeal.
Exactly. It seems to strip Bitcoin of its most desirable features and saddle us with some of the worst features of the cryptocurrency.
Absolutely. It becomes an electronic fiat currency is what it becomes, right? Which is where governments want to go, right? They don't want cash money, right? They don't want paper money floating around and being in existence. The whole effort is to continue to exercise control, right? Either I'll call it soft control using their words, or if we can't have that, well, let's have currency being represented just as digital zeros and ones. It's all part and parcel, I think, of the same impetus. And again, I get it, right? But it doesn't mean that I have to go along with it. And I find that by talking about it and relating it in stories that connect with people and their real world experiences, I find that's the most effective way, for me at least, to try to ring the bell and bring people's attention to this.
And I appreciated your conclusion on this, and that is that real, authentic Bitcoin sort of becomes, analogous to gold. It becomes gold, basically, which is what people said it was going to do. At least the proponents said it was going to do. But gold hasn't solved our problems. As much as I like gold and advocate gold and hold gold, it hasn't solved sort of the world's monetary problems because it's just not in high enough circulation. And your conclusion is that Bitcoin is going to become one of these sort of commodity currencies over time. Is that true?
Yes, and frankly, I like Bitcoin as a trade in the same way that I like gold as a trade. Right? I have, I'll say, real concerns with making it a core investment because of the political risk that I associate with Bitcoin. Right? But given my view that I think inflation in the real economy is coming, frankly, I think it's already here, right? But I think that the narrative around inflation is going to grow. I think that's extremely threatening to the prevailing central bank narrative that, we got your back, market, we got this under control. I think that once the genie of inflation is out of the bottle in the real economy, it's very difficult to put back under control. Right? You really think the Fed is going to raise interest rates from here when in Q4 of 2018 they tried to raise interest rates, to 2.5%, and they were basically taken out in the street and shot? Right? The Fed says, "Oh, we have all these tools to control inflation." Give me a break. They do not. They do not. Politically, they cannot. So as a trade, I like gold a lot here. God help me, I like Bitcoin a lot here. But it is particularly when it comes to, I'll call it again, I'm going to describe it as the political risk, particularly associated with Bitcoin, because it is digital. And even though it's censorship resistant in the distributed ledger technology, the blockchain that underlies it, to get it in and out the exchange, right, the wallet, where Bitcoin meets the real world, that's a place where governments have enormous control, just enormous control. So that political risk keeps me from having it as, I'll call it, a core lifetime holding, but it's absolutely something that I think is very attractive right here as a trade.
I understand almost everything you said there. I definitely understand Bitcoin as a trade. I understand gold as a trade in some circumstances, but why not gold as a store of wealth? That's sort of its traditional use.
Yeah, and I think gold can have that use as a store of wealth. I think, and I want to talk, for me personally, again, this is why, my store of wealth is in, the land and the farm. I find it, for me personally, that's where I want to try to store my wealth, right? It can be, I have a very broad conception of what real assets mean. Real assets can include intellectual property, right? I prefer real assets to have some sort of cash flows associated with them. I like that, right? But I'm not opposed, or I don't disagree with any of these conceptions of real assets. What I am opposed to, to the degree that I can, not be immersed in it, is that world of artifice, that world of narratives and story. So what I want in my investments, I'm just speaking for me, is I want to be closer to the real, right? In public markets, what does that mean? It means getting closer to real companies that still offer, real fractional ownership share in real cash flows. It's harder to find in public markets today. That's the same thing I want in private markets. That's the same thing I want in my own life, right? So look, for me, that notion of storing a value and real assets, for me, it's tied up more with land. It's tied up more with knowledge and intellectual property, right? But I get it. I'm not opposed to it. It's just, for me, that's how I like to express it.
I got two follow-up questions. Unfortunately, we have to get going because you're running out of time. But one of your conclusions was that Bitcoin was going to become more like gold, and one of the things that involves is sort of the stigma associated with gold, or the
absolutely
the stigma we attach, or the type of person that would invest in gold. That's the type of person that's going to invest in Bitcoin. Is the stigma part of the reason that you don't see gold the same way as you see other assets, or is there some political risk associated with gold that you don't see associated with other assets? Why do you put gold in a different category?
Well, I think gold has this, you call it the stigma. I would describe it as the intentional narrative that is created by government, right, to stigmatize gold. And you saw the same thing around Bitcoin, right, when Bitcoin started to grow in popularity. Oh, Bitcoin, that's used by a terrorist. You must be for the terrorist if you're, engaged with Bitcoin, right? We all saw this stuff, right? And so what I'm trying to do is, again, trying to observe, right, rather than try to predict. What I'm observing is that that government has a powerful vested interest in trying to control the adoption of gold as an alternative store of value, as an alternative currency, as a cryptocurrency, and they certainly have an incentive to try to control, digital cryptocurrencies like a Bitcoin. For me, and the way I think of it as a trade is that, look, their efforts to control that are limited, right? And I think that the seeing with our own eyes its value in an inflationary environment, yeah, I think I'd like to own some right now, again, as a trade. But for me to devote my wealth, my family's wealth, my children's well-being to something that I think is always going to be under this sort of assault, I'd rather find other ways, right, that I think are less risky of the government through soft methods or hard methods coming after me for that store of wealth. That's where I come out on this.
So, and this all makes sense. I would expect to hear sort of a former professor with a family at some point in life talking very conservatively like this. But you also ran a hedge fund.
Yeah.
So there is a speculator in you. And so I want to close the interview just by asking you about some ideas you have for the next year on where people might look for returns. You talk about sort of safer, cash flowing types of assets. Netflix was the stock of the decade in the public markets. and we know what it does with cash. It just burns it. The return was phenomenal. So if not those types of companies, where would you look for outsized returns in 2020?
So look, I've been levered long personally because when the rules change and it's going to be a political utility, that's what you want to be. So personally, we've had this, the past 10 years, for me personally, it's levered long and to go with this flow. So what I'm talking about in terms of narratives and the story breaking, it's not because I want to fight the Fed, right? It's because I want to be able to observe and then react to how the world is changing. I think we are on the cusp of a change from a 40-year deflationary cycle into the beginning of an inflationary cycle. And everyone's investment playbook from the 1970s, needs to be dusted off. Most people don't have that playbook. I wasn't a professional investor in the 1970s, right? But I can read and I can try to understand what worked then. That's what I think. That's the playbook I think we need to dust off now. Right? And I will say this: when you're talking about an inflationary environment, the worst place to be is in fixed income, right? We kind of get that, right? What you're looking for are companies that have pricing power. It's like they say fast food, where the three most important things: location, location, location. In an inflationary environment, the three most important things are pricing power, pricing power, pricing power. I think that fundamentals will matter again in an inflationary environment because I don't think that the Federal Reserve has the tools really to combat that genie once that gets out of the bottle. And so in the way that fundamentals matter again, for looking at individual companies, you need to look at pricing power, right? Multiples are going to suffer as interest rates go up. That's just a mechanistic issue, right? That high multiples mean that you're pulling forward, growth from the future into today. So I think that high-flying, profitless, cash-burning unicorns are under a lot of threat and a lot of pressure in an inflationary environment. I think that companies that, whether they're commodity focused, right, or whether they are perceived, whether their story has some sort of perceived pricing power alongside it, I think that's where you want to be. So like I say, I'm not predicting, but I am observing. And I think that's going to be the story of 2020, that these, inflation in the real world, which we've been told ad nauseum over the last decade, oh, there is no inflation, there is no inflation. That ain't true. There absolutely is. And once we get the spending that's going to come out of whoever is elected in 2020, well, that's when I think that inflation genie gets out of the bottle in the real economy. And that's what I think changes everything in terms of the story for the game of markets.
You didn't say this, Ben, but it sounds like a good argument for gold, silver, commodity currencies, and non-US dollar denominated assets. Would you go along partially with that?
Absolutely, with the exception of the non-USD currencies, because what we're talking about here, this is not just a US phenomenon, it's a global phenomenon. I think in terms of currencies, right, that the US is always going to be that best house in a bad neighborhood. So I don't have a prediction on where the dollar goes, right, up or down, because I think, anyway, I think that's the hardest thing to predict. What I can predict in a global inflationary environment, everything you mentioned in terms of that traditional playbook, I think it's going to be a playbook worth holding on to in 2020 and beyond.
Very cool. Okay. So you are at epsilontheory.com, on Twitter at Epsilon Theory.
I'm easy.
Where else can people find you? Anywhere else?
Look, that's the places to look. We've the website, Twitter, is free to read. We publish a lot, and I appreciate you introducing me to your audience, Albert.
Thank you very much, Ben. And definitely go to his website and check out that Real Vision interview. It was very enjoyable. Ben, I've kept you long, so thank you very much for joining us, and I hope we can do it again sometime soon.
It'd be my pleasure. Thanks again, Albert.